This is Galliano with Burns Estate Planning and Wealth Advisors. I'm sitting here today with Miss Ashley Terrell. We're talking about IRAs. Ashley, welcome.
Yes, well, welcome to Coffee Chat. How are you today?
I'm great. I'm excited to talk about some of these differences because everybody hears about a Roth IRA, a traditional IRA. You kind of know how they work. You kind of know the positives behind them. But let's get into some of the nitty-gritty.
Dig in a little deeper.
Absolutely. So first off, if someone wants to open one of these, what are they? Why are they better than just opening a different account? Or maybe not better is the right word, but what makes them different from just opening a bank account or a brokerage account and investing? Tell me a little bit about the IRA status, what it means, how's it work?
Right, so an IRA is pre-tax dollars, meaning whatever you contribute to your IRA is tax deductible. Whatever you contribute to your Roth is not tax deductible because you're already paying taxes on those funds. So essentially they're going to grow tax-free.
Okay.
While an IRA is growing, and you will have to pay taxes on that eventually, right?
Right. So what about this? If someone wants to open one, can you just go online and open one? Is that a possible thing? Is that something you can do?
Absolutely, yeah. You can go to TD Ameritrade.com or Fidelity.com and just open a Roth and contribute there.
Okay. So talking about making contributions, there's a lot of weird rules about how much you can contribute and what happens when you do. Let's talk about some of the tax benefits, first off, to contributing to a traditional IRA. Let's say you don't have a plan at work. Why contribute? How can it help you? Tax-wise.
Tax-wise? Because whatever you contribute to that IRA is going to be non-taxable whenever you file your taxes. So it's essentially a tax deduction up to $6,000 or $7,000 depending on your age.
Okay. All right, so those are kind of some of the big differences. How do people know which one to contribute to? Because is it better to take the deduction now versus getting the tax-free money with the Roth later? How does someone come about making up that decision?
I think it just depends on everyone's individual, situation. Most people are in the situation where they don't have the option to contribute to a Roth 401k, so they have to contribute to a traditional 401k. At that point, it's good to get an outside Roth and contribute to that, just so you have another tax qualification that you're contributing to. So it really just depends on the individual situation.
No, absolutely. And to piggyback on that with Ashley, it's never an easy answer. It seems pretty easy, like, why wouldn't I want a Roth? It's tax-free. It's always going to be tax-free. That is awesome. Well, there are situations later in life when you're making quite a bit of money, especially a household, both people making money, and you jump tax brackets from 12 to 22%. Sometimes it is good to just shove as much into the 401k as possible because when you retire, what are your taxes? Very low. So sometimes it's good to take the tax break now. It's not an easy calculation, which is why it's good to maybe seek a little bit of tax advice or professional advisor assistance because not always black and white.
Each situation is different.
Okay, do Roth IRAs have required minimum distributions? We ask this right now because, guys, we're doing this show in December and it is the end of the year. We're doing all these required minimum distributions for everybody who's over 72. What if you have a Roth?
Well, the good thing about Roths is they're not included in that RMD calculation. So that's actually one of the benefits that we find. A lot of times in retirement, people don't need that income. So having a Roth definitely helps with that. You don't have to take out as much if you start doing some Roth conversions and have a little bit in a Roth.
Okay. And then when can I draw money from a Roth IRA? Is there a certain time of year that I can pull money out if I need it? Do I have to be a certain age? What if I start one at 45 and I need some money? What's the deal with that?
It just depends on how long you've been contributing to it. You should wait at least 5 years. At that point, you can withdraw the contributions.
And is it the same as a traditional, where you have the whole 59 and a half thing where you need to wait till you're retired to take the money out?
Yeah, the good thing about a Roth is you can actually access it earlier than a traditional IRA. As long as you've had it funded for 5 years, you have access to some of those funds.
That's pretty awesome. So when talking about a Roth and a traditional, obviously there's a lot of weird things that you need to know taxation wise, but ultimately they're both really nice tax vehicles to utilize in specific situations. So, an interesting question when you're looking at extra money in the bank, what age you are and where you are in life probably plays a big difference in whether you put money into the Roth or the traditional. Let's talk about the audiences that's listening and kind of what ages you might want to think in situations that the Roth is better. We'll start off young.
Okay.
Okay, so you've got a little job. You're in your 20s. You're making some money. Roth or traditional?
Roth. Your income's not too high. You don't have to worry about absolutely needing that tax deduction. So, and you have lots of time for it to grow. Definitely Roth.
Yeah, so we're in the business. There's no such thing as definitives because every situation is its own. But if you're in your 20s, pretty close to most times you're going to want to look at a Roth because of that. You get a whole lifetime of tax savings. That money that's in there is just going to keep rolling up. And then it's got the ultimate flexibility when you want to pull it out versus the traditional. So the younger you are, the more attractive the Roth probably is. Okay, let's move up a little bit. Now we're a little middle age. We've got a few years on us, but we still got a long horizon before we retire. Let's say we're in our early 40s.
Okay.
Early 40s, we're making below the requirements, so we can contribute to a Roth, or we could take the tax savings to help us with our everyday paycheck tax deductions. What do you go to at this point?
I think that there's a little bit to consider inside of your retirement plan at work, what type of plan you're contributing to. So I think that makes a difference, but it's kind of dependent on your individual situation. I think at that point it's a little iffy. What do you think?
No, I agree, and this is exactly why we asked the question, because when we have friends, neighbors, colleagues, and they say, what should I be contributing to? It's easy to say Roth, but until you actually look at everything and you look at the tax deductions they receive from just maxing out a 401k, it's difficult. So I think you're right that at that age it starts to become a little murky, where, as some people say, Roth every day, all day.
You have to outweigh is the tax benefit more. Is the tax benefit outweighing what I would get in gains?
Yeah, absolutely. No, that's a fair point. So what's more difficult is as you get older, you typically pay more in taxes until you retire. So once again, youth is on your side with the Roth. The earlier you can get it started, the better. But as you get older and you start making a little more, you start to get phased out of your contributions, and your tax bracket gets worse. So now we're retiring. Now we're 60 and we have 3 or 4 more years of work. We're in a very high tax bracket. There's a good chance we're not even able to contribute to a Roth. Okay. So we've got this moment, 20, I guess, when we're having earned income, to 45, 50. That's really our window where we're looking at getting that Roth as big as we can.
And then I also like early in retirement, while income is low, doing some Roth conversions at that point. I find that's a good time.
Yeah, conversions, whole nother topic. We love talking about it. Guys, you have to come in and talk about conversions versus contributions. There's so much out there. We're here to help. I'm Gerrod Galliano.
Ashley Terrell, thank you for joining us for today's Coffee Chat.